Oh, good morning, good morning, good morning. And you can see it's still dark outside as I prepare for today's morning market commentary. Here I am with my Dunkin' Donuts, and I'm getting ready for the day. It's all about the Fed, right? It's going to be a very exciting day. It's been kind of a very interesting and dramatic week, and I guess the question is, will it become more dramatic today at 2:30? So let's just see what we're going to think, right? So stocks continue to struggle as they look for direction, and that direction may come today. And today is all about the Fed, and what you want to hear is Jay take back control of the conversation, because at the moment he's lost control, and that's what's causing all the angst. Lots of earnings due out today, but Tesla will come out after the bell, so expect lots of chatter about Lonnie, right? There's also lots of eco data today. One of them is new home sales. Are they going to take a hit due to higher rates? We'll check that out at about 10 o'clock. Treasury holding steady at 1.77%. Oil trades up, the VIX comes down, and the Russia crisis has now moved to page 6, right? We're not even really talking about that today because it's all about the Fed. And what are we having for dinner tonight? We're going to have the Drunken Spaghetti, because that's really what it feels like. So look, as I said, stocks continue to get pushed around, closing lower on the day, even after that good old college try to take them higher. All the indexes ended the day in the red. The Dow falling by 67 points, 0.2%. The S&P's down 54 points, 1.2%. The Nasdaq lost 315 more points, down 2.3%. The Russell gave back 30 points, or 1.45%, and the transports lost 255 points, or 1.6%. The 10-year Treasury ended the day yesterday yielding 1.76, and this morning it's right there. Oil added 2.25%, or $1.86 a barrel to end the day at 85.61, and this morning it's up another 40 cents at 86.05. The VIX continues to surge, rising 20% yesterday to 35.80 by 11 o'clock, before only ending the day up 4% at 31. And this morning it's down about 4 points. Financials and energy, the only two sectors in the green, adding 0.5% and 3.8% respectively. Remember, think value. And this leaves the energy ETF up 17.6% year to date. The only sector that's positive. Tech and communications leading the markets lower, down 2.3 and 2% respectively. Disruptive tech, ARC, off 25% year to date, while disruptive tech, the short trade of disruptive tech, is up 25%. The value trade is down 3.3, yet the growth trade is down 13.8% year to date. The contra ETFs, going short the market versus being long, are all up. The Dow short's up 5.6%, the S&P short is up 9%, and the Nasdaq short is up 14.6%, completely mirroring the losses in those indexes. So today, like I said, it is all about the Fed. The action continuing to highlight the level of anxiety that investors are dealing with as we await today's announcement. There's lots of speculation about what might happen and lots of speculation about what should happen from all corners of the markets. But for the markets to settle down, Jay must take back control of the conversation if he wants any of this to stop. He needs to counter all of the ridiculous comments talking about 5 and 7 rate hikes this year, taper and balance sheet reduction, all happening at the same time. I mean, if he doesn't do that, then you better watch out below, right? As the bottom is going to fall out. Because if the FOMC committee thinks that this is what needs to happen, then they might as well stand up and say that, right? They might as well stand up and just admit that they were wrong and say something like, well, we told you that we had it under control. The truth is we completely missed the boat. None of us saw this coming, and we're way behind the 8 ball. So the only way to slow or stop this is by attacking it from all sides. Now, to be fair, I do not expect that is going to be the conversation at all. I do not expect him to say that he's lost control, but I do expect him to say that the situation continues to be challenging and that inflation pressures are not yet subsiding. So we are ending the taper by March versus April, so a little bit sooner. Rate hikes will begin in March as well. But he needs to hit the markets with a 50 basis point rate hike right out of the gate, and then back off with 2 more 25 basis point hikes in July and September. That still gets us to an overall 1% increase for the year, which is kind of what we've been told, a level that is also consensus for any of the level-headed economists out there. The talk of 5 or 6 rate hikes need to be eliminated, unless, of course, they haven't been telling us the truth all along. And then the talk of the balance sheet reduction happening in March as well should be put to bed. The consensus seems to be that will start happening in July. So that combined with 2 more 25 basis point increases should be enough to begin to attack the inflationary pressures that are building. But remember, we also have this $9 trillion balance sheet. So we're in a place that we've never been before. So yes, is it going to be a bumpy ride? Absolutely. So just strap yourself in and get ready. In the end, if he remains unsure or even flinches, then expect the algos to go into sell mode once again. If he delivers a message that is confident and deliberate and does not allow for misinterpretation, then I think the markets will settle down. He needs to make it crystal clear and correct any journalist that is trying to twist the words. But in the end, people will hear what they want to hear. The market just needs to know or wants to know the plan, good or bad. Right? That's okay. It can deal with good or bad. What it can't deal with, and what has been very clear, is the uncertainty of it. The range of opinions being offered by everybody but the Fed has created all of this angst. Now look, I just laugh at all this because there was a time, I think the last century, when the Fed chair and the committee said absolutely nothing until they made the decision. Then they told the markets what the decision was, and then the markets had to figure it out. They didn't hold everybody's hand. They didn't ask you to come and lie down on the couch and tell them how you feel. They didn't ask if it was okay to do anything. They were in control. There was none of this, let me hold your hand so you don't get scared stuff. But I'm dating myself, so let's not go there at the moment, right? But it is truly amazing for anyone that remembers it, then versus now. It's just amazing how the Fed operates. Now, this morning, U.S. futures are celebrating what it is assuming is going to happen. And that's what I said above, that Jay will take back control and discount much of the latest chatter coming from some of the big investment banks. Dow futures are up this morning 300 points. The S&Ps are up nearly 60. The Nasdaq up 275, and the Russell's up 25 points. Yesterday we heard from Johnson & Johnson, 3M, American Express, Verizon, Arch & Daniels, Lockheed Martin, and a range of others. And they all beat on the top and bottom lines, and many of these are considered value plays. And they found buyers. After the close, Microsoft also reported a beat and offered up encouraging forward guidance. That stock rose 2% in the after-hours session, and this morning it's quoted up $8, or nearly 3%. Let me remind you, the recent angst has taken 21% of the value out of Microsoft. A move I would say is a bit ridiculous, right? So the question is this now a buying opportunity? Look, Microsoft is by no way Peloton, so you can't even, it's ridiculous. Microsoft is down 25%. What's changed? Absolutely nothing. Lots of earnings out there today. General Dynamics, Abbott, Anthem, ADP, Boeing, FCX, Glassworks, Telephone, NASDAQ, all before the bell. While after the bell, we're going to hear from AMP and Raymond James Financial, Intel, and Tesla, to name just a few. And expect all kinds of chatter today around Tesla just because it's Elon Musk. No other reason but because it's Lonnie Musk. Apple is due out tomorrow, and Google is not out until the 1st of February. Eco data today includes mortgage apps. Wholesale inventory is expected up 1.2%. Retail inventory is expected up 1.5%. New home sales expected to be up 2.2%, and this will be a key to watch, especially since the 30-year mortgage rates have now surged to nearly 4%. I think they're at 3.75 right now, which at some point will stop the insanity of continued rising prices. But none of these will trump the 2 p.m. release and the 2:30 p.m. press conference by the Fed. So just sit tight and get ready, right? Understand there's going to be the chatter all morning. European markets are up across the board, rising better than 2%. It's all about earnings and the Fed. Recent comments out of the ECB suggest that the European inflation outlook is no reason for the ECB to change course, a comment that I'm sure he is going to regret. On the other hand, he's also warning Europe that they are at major economic risk if the Russian crisis continues to explode, right? Or if they invade Ukraine. Cryptos continue to thrash around, though Bitcoin is trading up a little bit at 37,800. Ethereum is back at 2,500, right? I would say continue to expect more volatility in this space. The S&P closed last night at 43.56. It traded as low as 42.87 yesterday. I still expect that at some point we are going to test Monday's lows of 42.22 before this is over. Just to be clear, there's been a lot of technical internal damage done to the markets. So it is going to thrash around until it gets clarity. Clarity, we hope, comes today. The Fed holds that key right now, and what they say will matter. But it will be what investors hear that is more important. No, we didn't even talk about Russia today, really, right? And that's because in the end, the geopolitical issues, like I said, do not price stocks, right? They create chaos in the short term. In the long term, they don't price stocks. So we're having dinner tonight. So I think this is just perfect, right? We need drunken spaghetti. So I think I'm going to ask you, does anyone want a glass of wine? Because this is how you make this dish, right? You cook it in water and red wine, right? A nice Chianti or vino di tavola, right? Like a table wine. No need to use an expensive red wine. Just go out and buy yourself a nice Chianti. The trick here is that you're going to add equal parts of water and wine. Bring it to a boil. Add the pasta. Cook for 7 minutes and then strain it. You're going to reserve a mug full of that water-wine combination. And then you're going to finish it off by sauteing in a pan with butter, garlic, pancetta, and a little bit more wine, right? So let me tell you how to do this. For this, you're going to need, like I said, the nice Chianti. You're going to need garlic, butter, the spaghetti. You can also use fusilli, linguine, bucatini, something long, right? It needs to be a long pasta, not a short pasta. You're going to need olive oil, chopped parsley, pancetta, red pepper flakes are optional, but you can use red pepper flakes if you want to spice it up a little bit. And naturally, you need plenty of fresh grated cheese. On this one, you can use either Parmigiano or Locatelli Romano. Either way, it's delicious. You're going to add equal parts of water and red wine to the pot, bring it to a boil, add the salt, add the pasta, cook it until al dente, 7 to 8 minutes. You know how to play this game already. In the meantime, you're going to peel the garlic and then you're going to crush it and slice it. You're going to chop up some pancetta into small little bite-sized pieces. You're going to put butter and olive oil in the saute pan large enough to fit the pasta and then place it on low heat to slowly melt the butter. Now turn the heat up a little bit, add the pancetta and cook until it's just crispy. Now toss in the chopped garlic. Saute that around. Right here is where you're going to add the red pepper flakes if you choose to want to make it a little bit hot. If you don't, no need to add any red pepper flakes. When the garlic gets toasty, you're going to add the additional cup of red wine and about a quarter cup of pasta water. Turn up the heat until the liquid simmers. Strain the pasta, reserving always a mug full of the water, right? You want to now toss the pasta into the saute pan with everything, with the garlic and the wine, and right? You're going to mix it well, right? Keep the heat on very low on simmer, tossing the pasta so that it mixes with the, with the wine and the water and the garlic and the butter and pancetta, everything's in there, right? You don't want to let it dry out though. Remember, that's why you have the extra water. You can add a little bit just to keep it moist. You want to taste it. It's all good. You can season it maybe with a little bit more salt and pepper if you need it, but probably not. You're going to add a handful of grated cheese. You're going to toss it again so that the cheese is now in there, right? It's kind of gotten hot and melty with the pasta. You're going to serve this in warm bowls, and you're going to make sure to have plenty of extra cheese on your dining room table for anybody that wants it. It's a great dish. Look, it's simple to make. It's really one pot. You don't have to, well, it's 2 pots, right? Because you boil the pasta, you got to do the saute pan. So it's 2 pots. But it's relatively simple to make. The whole thing shouldn't take any more than 20 minutes, start to finish, and then you're going to have a great meal. You know what? If you want, have some toasted Italian garlic bread on the side, because you can never go wrong with that. And finish drinking the red wine that you bought, either the Chianti or the vino di tavola, whatever you got. But finish the meal with the red wine, so you're not wasting it. In any event, the day is just getting started. You see now the sun is just starting to come up, and it's all about the Fed. So stay tuned. I'm taking a couple of days off. I will see you next week. In any event, take good care.